In today's training, we're going to be reviewing income in the global software, how to enter your client's income, adjust it over time, and review its effects on the plan. We're going to go to our plus button in the bottom right-hand corner and select the income tile. In here, you have 3 different options to choose from: employment income, other income, and windfall. Windfall would be a one-time inflow, for example, an inheritance. We're going to start with employment income, and we're going to enter in Johnny's employment income. Under source, you have a couple of different options. You can do employed, self-employed, or company owner. I'm going to leave this as employed. Enter in Johnny's base salary as well as any expected bonuses or commissions. You have the ability here to continue to receive income if you're modeling a disability event. That can be toggled on, or we can leave it toggled off. Growth rate, this is going to be how this income grows over time in the plan. So each year with this 3% setting, this will be inflating 3%. We're going to go to timing and just review this really quickly. Employment income will always assume that it's going to start at plan start and end at retirement. If you have a client who plans on working part-time for a portion of their employment, or you need to model any other major adjustments to their employment income, you can add a step in here. So for example, if my client was going to go down to a more partial schedule, we would enter in that salary adjustment in today's dollars, go to timing, and then just select when we expect that adjustment to be made. You'll want to give that a name. Johnny moves part-time. Set that as your step timing, and now we've got the adjustment to his income occurring at age 61. I'm going to click Save and add another, and we're going to do Nora's income next. And we're going to enter hers in as well as any bonuses or commissions. Reviewing our timing, it's automatically going to default to when Nora retires, and we're going to click Done to save that. You'll see now we have some blue in the plan. That's going to reflect all inflows. So each one of these bars is going to represent a year in the plan, and you can see all of the inflows flowing in that given year, any surplus income, total need versus basic need. And we can also go to year view and see the income broken down per person in the cash flow section. You can see how that income grows or changes over time. So if you wanted to review whether or not Johnny's income is stepping down as you expected it to at age 61, you can review his income is $264 in this year and drops down to $194 in the following year. Another thing on employment incomes, once you've entered them, it's going to use tax inputs in your plan that you entered previously to determine what their estimated taxes are going to be for those employment incomes. All right, so the next thing I want to review is how to enter in an expected state pension in the future. I'm going to go to my plus button again, bottom right corner, select income. We're going to do an other income type. This is a great way to model different types of income outside of employment income. So we can give this a name, Johnny's state pension. We'll give it an expected amount, and we can select the taxation type here, whether or not it's taxable, and if it's earned or not. Again, we can use this growth rate as our cost of living adjustment rate, and you can state whether or not you want this amount to be entered in today's dollars or whether or not you want it to enter into the plan at $35,000 and then inflate from there. I'm going to do that in this example, so we're going to use future value. I want that to start in the plan when Johnny retires and end at his mortality event. We're going to click Done to save. We should now see that other income in the plan down here in blue. See the inflows from his state pension. If you click details, you can see it listed as other income in the plan. We're going to do Nora's state pension as well. So we're going to go to income, other income, select her, deselect Johnny, and we're going to select this as a future value. Timing will be when Nora retires until her mortality event. I'm going to click done to save that, and we should now see her income from the state pension flow into the plan at her retirement. And if you want to go to year view and review that that's coming into the plan when you expect, you can do that in the cash flow section. We're going to see that here as other income. Johnny's is starting when he retires at age 65. And then when Nora retires, hers comes into the plan as well. I hope that this has been helpful. If you have any questions or need any assistance setting up a plan or inputting income, feel free to reach out to us at support@planwithvoyant.com, or you can request support from inside of your plan, enter your question into the text box, and share client access. Thanks for listening.